Hi guys, this is Mitch King with Trade Stocks America with the Thursday morning, October 7th, 2010 daily stock report. Here's the Dow, up 0.2% today, still on an uptrend, but the real story is in the Nasdaq with the tech stocks. Here's the Nasdaq Composite, down 0.8%, but we saw quite a few stocks on the software side that really dropped substantially today. Let's take a look at those right away. Here's CRM, Salesforce.com. All the computer software and services sector really dropped hard today on a stock with a stock symbol of EQIX. Let's go to that right now, even though it's not in our stock list. EQIX was down 33% today from a high yesterday of about 104 and today a low of under $70. So that's a $35 drop, and it's lost 1/3 of its value. And this brought down a lot of stocks in the Nasdaq Composite. Most any stock related to technology dropped, even though they were not necessarily in the software sector. So this one dropped, our CRM, down 7.8% today, and you should have had your stop loss, of course. Started to move up yesterday, and we expected this to move right up to 120, assuming this kind of news didn't happen, but that's why you got stop losses in case something disastrous happens. Here's a stock we saw during the trading room is RAX, which is technically not a software company. It's really host your websites on their servers, and it was down 11% today, but it shows the category as internet software, and that's not totally accurate. Here we saw during the day a lot of stocks correct, and here's Citrix Systems, which is the maker of GoToWebinar and GoToMeeting, down 14% today. This is a stock we should start looking at as a potential long position. So you guys should have been stopped out of CRM. Here's AZO, real steady eddy uptrend, auto parts sector. CMG down 2.5%, had a downgrade by an analyst. We're still in an uptrend. Don't expect this to be a real problem. Going back to this EQIX trade, this was a earnings disaster where they have a warning that they warned themselves, and that brought this high-flying sector down pretty sharply. So we're starting to get a little more fear in the market, although the market did really well at ignoring some negative news. Here's GMCR down 2.25%, still looking for a rebound here. If this makes a reversal and starts heading down and goes below that 2750 area, that would definitely be a problem. So I would set your stop loss somewhere down there. And this is for the aggressive investors, traders that can handle a little more risk tolerance. But my best guess is that we go into the low 30s in the next week to 10 days. Here's Urban Outfitters, still looking for a rebound up into the low 30s. VIT was down 3%, a software manufacturer. Didn't really affect that uptrend line. APKT Telecom down 8% today, clearly below that uptrend. If you just draw a simple line back from this, and you see it a couple times, it did get below that. Clearly this is one right here, and now we broke that here. So it's your call whether you want to hang on to that and see if that rebounds up. But the discipline that we've got is when you go below that recent low, which is right on this day there, and you violate that, the general rule that keep you out of trouble over the long haul is your stop loss should be triggered. And yes, you will take some of these hits like this and get a lot of stops, and it is frustrating, but you just got to remember long term you're trying to be disciplined, and most of these things will work out for you. We're not clearly going to get a winner all the time. So you just got to understand that's part of this process of investing or trading. Also stopped out of LOGM, the software. Same principle there. There was that bottom here, and we put a stop in there right in here. So it'd be about $34, just under 34. And today we go to 33.08, down 7.5% at the close. Here's a bull short we saw trigger off during the middle of the day in the trading room. We posted that. Here's the daily chart on VHC. Peaked up here at about $20, and you can see that volume that ramped up here in the last 3 days that really got us interested, and that's what we're like. We like that big increasing volume. Let me draw that down here. And you've got that parabolic curve right at the top where stocks, these bull shorts want to sneeze, and this is a bull short that we pointed out in the trading room we're going to show you a 3-minute chart in just a second here. And this stock went from $20 to $15. So if you take a crosshair, this is just hit $20, and the bottom of this wick there on this candle was 1506. So it bounced around back up to 17. Let's take a look at a 3-minute chart on that. And here you go on a intraday chart today on Wednesday. It's curled right over, and if you were quick on the draw enough to short this and get this down from, maybe you picked it up here at 1850. I saw some guys even 1880, dropped all the way to 15, make whatever they made, and a lot of people went long on this and bounced on the long side. And then my suggestion during the day was to enter short on the top of this bounce as it moved upwards, because most of these do come up and then they fizzle down, just like this one did, exactly like a bull short on the first day of a correction. Now, if you're short this stock overnight, for anyone that's in the trading room, usually these gap down in the morning, head down on that first drop, and then you cover that short. It could go as low as in the low 14s for another $1, but either way, you're up on this profit-wise quite nicely. This is the way you trade a bull short, is if you miss that first drop like that, wait for a bounce like that, and that would be right here where that circle is, to start entering a little short positions, see how it acts. Maybe you didn't get it a full position, then it comes again, and then you hit it short again right there. And you can get that with all your indicators on your charts on when to be selling. Here's the intraday chart on CRM, Salesforce. Let me show you EQIX first. Okay, this is that EQX that brought all the software sector down on the NASDAQ, as well as some of the other tech stocks. This stock was about $104 to $105 yesterday at the close, and the gap down opened under 81, which you can see right down in here, and just sold off at the open right in here. The market opened somewhere around just under 80, went to 81, and then look at this, closed down to another $10. That wasn't a day trade for us or anything, but I'm just trying to show you how one stock can bring down a whole sector. And here's that CRM today from this line on. Let's pull it back just to one day. Just drop, drop, drop. Gave one little bounce that was tradable. The others were not very good on a trade. So you guys know the routine. Sorry for the long video. Put the odds in favorites, wait for the good ones, and don't get leveraged, especially those bull shorts.